TheTraderGuy.com Technical Analysis.
From TheTraderGuy.com, this is Chris taking a look at the upcoming April 6th trading session. I have the Euro Pound in front of you, and this is one that I'm paying quite a bit of attention to at the moment, and I'll show you exactly why here from a longer term standpoint as well as a shorter term standpoint. This is a daily chart, and I can make an argument for a trend line at several different places, but they all tell me the same thing. They're all telling me upward pressure. So that's the first thing. We have just, during the session on Tuesday, broken above the psychologically important 0.80 level as the euro continues to gain upon the pound. And we also had the hammer from the Monday session that we broke the top of. So these are all very positive signs. And then when you look at a different time frame, I'll step out to the weekly, and I'll go ahead and zoom out so that you can really kind of see what's going on. I have a Fibonacci retracement drawn from the massive sell-off that started in the middle, early to middle part of 2013. And you can see that this has been a very impulsive move, and quite frankly, I'm surprised that we continue to press this high. So what's causing this? Well, you can say a lot of different things, but I believe it's all about the Brexit, the British possibly leaving the EU, and they're punishing the pound for it. You can see it's a straight shot up. Now the question is whether or not they leave. We don't know. We won't know that until June, but right now it looks like a very real possibility. So between now and June, we could continue to see quite a bit of bullish pressure. Now, it's only Tuesday. The weekly candle being a hammer up here doesn't really carry the same weight as it would, say, on the close, obviously. But we are very close to breaking above this resistance here, checking the 61.8 level out. If we get above there, my experience has been most of the time you make a complete round trip. It would take quite a bit of bullish momentum to continue that in a short amount of time, but then again, we've seen just an astronomical move higher. So once I go back to the daily and I zoom in a little bit for you here, you can see that we are closing pretty close to the top. So on a break above the top of the daily range, we feel that the market continues to go higher. Even pullbacks at this point are probably going to find support down to about 0.7950. So either way, we are bullish. It makes sense. The British pound's getting pummeled, and at the same time the euro is starting to show strength. There could be a little bit of a knock-on effect today from the FOMC meeting minutes in America. If they are more dovish than expected, money tends to run from the dollar to the euro at that point in time, and it will be felt in this market as well as more euros are being demanded out of the marketplace. And of course we have the overhang of the UK leaving the EU possibly. That'll be another recipe for a move higher. So we expect this market to continue to go quite a bit higher. We don't know if it's going to be a grind or it's going to be an impulsive move. Keep in mind this pair tends to move slowly. It kind of chops around, but again, you know, the tick value in this contract is almost double what it is everywhere else. So 40 pips here is more like 75 somewhere else.